Hello guys, through this video you all will be able to gain a comprehensive knowledge on what is accounting. I hope that you all are studying accounting for the very first time. With my personal experience, I know how would you all feel about accounting. Nothing to worry guys, we'll jump into the session. Now I'll give you all a basic introduction on accounting. Before studying any subject, it's essential that you must have a fair knowledge on your basics. In this case also it's the same. Now we'll see what's accounting basically. Accounting is a process of providing useful information to its stakeholders. What did I say? I said accounting is a process. As you all know, a process will consist inputs and outputs. Here in accounting, inputs are events and transactions, and output is providing useful information. Now you all might have a doubt what is the process that the events and transactions must go through in order to bring out useful information. There are 6 steps that a transaction goes through. They are analyzing, classifying, recording, summarizing, communicating and interpreting. Finally, you will derive at the output, that is useful information to stakeholders. Now we will see what are the objectives of accounting. Number 1. Assess whether the business makes profits. Number 2. For decision making purpose. Number 3. For legal objectives. Number 4. Maintain proper accounting records, that is error free records. Now we will see what's a transaction. Events and activities which will affect the resources of a business is known as a transaction. That is, when a business carries out its activities, it requires to exchange resources with various parties. Here are some examples for transactions: cash sales, cash purchase, owner introducing capital to the business, etc. Now we'll have a look on the elements of accounting. Basically, there are 3 main elements in accounting. They are assets, liability and equity. Apart from that, there are 2 other elements in accounting. They are income and expense. Now let me explain you all about assets, which is an element of accounting. Basically, assets can be categorized into 2. Number 1, non-current assets. These are the assets owned by a business for more than 12 months. Example, land, building, motor vehicle and etc. Number 2, current assets. These are the assets owned by a business for less than 12 months. Example, fixed deposit, cash in hand, cash in bank, debtors, etc. This is the definition that you all have to memorize in order to define an asset. Assets are resources that are controlled by a business as a result of past transactions and from which future economic benefits are expected to flow into the business. These are the basic knowledge that you all have to have in relation with assets. Now we will move into the second element of accounting, that is liability. If we observe properly, similar to assets, liabilities also can be categorized into 2. Number 1, non-current liability. These are the liabilities that a business owes to outsiders for more than 12 months. Example, all long-term loans payable to outsiders. Number 2, it's current liability. Current liability is the liability that a business owes to outsiders for less than 12 months. Example, creditors, accrued expenses, prepaid income, and other liabilities which doesn't fall under non-current liability category. This is the definition that you all have to memorize for the exam. That is, liability is a present obligation arose as a result of past transactions which will result in future cash outflows. Now finally, we will see what is equity. There are 2 transactions and 2 elements which could result equity to increase or decrease. Where capital introduced by the owner and income will result in increase in equity, and in the other hand, drawings and expenses will decrease a owner's equity. Now we'll have a basic introduction on the terms that is appearing on your screen. Number 1. Capital introduced by the owner. It can be either cash or in fixed asset. Drawings. Drawings is simply either goods or cash taken to the owner's personal use. Income is increase in equity except introduction of capital, that is when capital is constant there is an increase in equity. If it is so, it is recognized as an income. Expense is decrease in equity except owner's personal drawings, that is when the drawings are constant. If the equity decreases, it is recognized as an expense. Now we'll look into the definition that is important for your exam. Equity can be defined in this manner. Equity are the resources that belongs to the owner. It's just simple. The final principle to be learnt is the equity formula. Equity can be ascertained in the following manner: capital minus drawings plus net profit or profit. Okay guys, I hope that you all got a good knowledge on introduction of accounting. I don't think that it's a big deal for y'all. And make sure to get my comprehensive question pack which covers all the basic principles in this video. Thank you and goodbye.